Wall Street is opening on a pessimistic note amid gloomy forecasts and bad news. Our analysts know about trajectories of popular trading instruments. Investors are unnerved, awaiting crucial economic data. Besides, grim forecast of a recession are putting pressure on the US stock market. The major stock indexes are extending their losing streak today. The Nasdaq showed the worst performance yesterday, having slumped 1.04%. The Dow Jones slipped a modest 0.32% and the S&P 500 shed 0.75% to close at 3,612 points. The benchmark indexes traded cautiously lower, suggesting another hopeless day on Wall Street. Despite the empty economic calendar today, the day is full of remarks by Fed's policymakers, so the stock market is set to remain under pressure. At the same time, investors are still cautious, which promises quiet trading and minor changes in stock indexes. The S&P 500 is expected to trade in the intraday corridor between 3,560 and 3,670 points. Wall Street suffered losses on Monday for 4 days straight. The high-tech sector and the Nasdaq accordingly are wound down the most. As for the S&P, 7 out of 11 sectors closed with losses on Monday, with the energy sector being the most battered. Apart from the hawkish Fed and recession fears, pessimism on Wall Street was evoked by the White House and its trade standoff with China. In a response, the stocks of semiconductor manufacturers such as NVIDIA and KLA Tanker tumbled after the US tightened control over chips exports to China. PayPal shares were also under the spotlight. They plunged almost 6% after the company had updated its own statement on Monday. The New York pre-market retained the bearish mood both for the whole market and companies with a mega capitalization. Stocks of Apple, Tesla, Microsoft, Amazon and Meta traded mixed. Stocks of hardware and chips manufacturers traded under pressure. The doom and gloom is spreading over the banking sector. Stocks are losing ground ahead of the season of corporate reports for the third quarter. JP Morgan, Citigroup and Morgan Stanley will be the first to report on their corporate earnings. JP Morgan CEO Jamie Dimon also dampened market sentiment. He predicted another 20% slump in the stock market from the current levels because a recession will cripple the US economy in the next 6 or 9 months ahead. Recession fears are cemented because China reimposed coronavirus restrictions amid growing numbers of positive tests for COVID. The International Monetary Fund is due to post the Global Economic Outlook and the report on global financial stability at the annual summit in Washington. The IMF is widely expected to downgrade its forecast for global economic growth. No doubt such fundamentals do not suggest a rally on Wall Street, though some faint attempts to recover possible. The currency market is also trading quietly on a Tuesday. Popular currency pairs are showing weak moves, having got stuck sideways. The US dollar index is drifting lower but still remains at the comfortable high of 113 points. The US dollar will have a lot of catalysts to resume its rapid rally, and for the time being it's taking a breather. The intraday corridor for the index is seen between 112.60 and 113.70. On a Monday, the greenback was able to assert strength thanks to remarks by Fed speakers. Charles Evans said that the federal funds rate could rise above 4.5% at the beginning of the next year and would be put on hold for a while. Vice Chair of the Federal Reserve, Lyle Brainerd, said that the Fed finds aggressive tightening appropriate for its goal to curb inflation. Nevertheless, the pace of further rate hikes will depend on incoming economic data. Brainerd also confirmed that the cycle of rate hikes has already been easing economic growth, perhaps stronger than expected. Interest rates will rise higher. She also added that the Fed would monitor economic conditions and adjust its policy decisions for economic data. Other Fed's policymakers are due to speak tonight: Loretta Mester and Patrick Harker. The USD CAD pair has crossed the landmark level of 1.3800, trading firmly higher. The currency pair is likely to trade in the intraday corridor between 1.3780 and 1.3840. Previously, the loonie recovered on the back of a rally in the commodities and the upbeat employment data from Canada. However, the Canadian dollar has been hurt by falling oil prices for the second day in a row. The benchmark rates are losing ground for obvious reasons. Investors are stuck in recession concerns and are worried about a dwindling demand due to the COVID resurgence in China. Commonly, oil prices are sensitive to the news of an economic downturn. The annual summit of the IMF and the World Bank confirmed the bleak prospects. Brent crude futures shed 1.16% to trade at $95.04 a barrel. WTI futures lost 1.62% to trade at $89.65 a barrel. Global risks and the looming slowdown in the global economy make a dent on digital assets as well. Like on Wall Street, trading volume in the crypto market is modest, with the crypto assets trading in the red. Bitcoin is hovering above $19,000, having rebounded for a few times after its dips. The token has fallen 0.67% today, trading at around $19,100. Altcoins are less vulnerable to the risk of mood. The Ethereum retreated off $1,300, having shed 20 points or more than 2%. Solana and Ripple are also creeping down, but Litecoin has gained 3.18%. The outlook for Bitcoin remains the same as yesterday. The crypto is likely to trade in a narrow range between $18,600 and $19,400. Our analysts reckon that the most realistic scenario is another gloomy day on Wall Street. However, don't forget that markets could easily reverse their trajectory. Earn with the InstaForex, and see you tomorrow.